I'm delighted to welcome today Steve Murray from Mather and Murray Financial Health Check people, which is a bit different to what I normally businesses I normally interview, which is health check, but this is financial health check. So Steve, welcome.
Good morning.
And you're in sunny Swindon.
We are not so sunny today, and it's been rather blustery through the week, but shouldn't really grumble. We have had some good weather.
Do you predominantly look after clients in that area, or do you work nationwide, internationally?
Nationwide. We do England and Wales. We don't do anything in Scotland at the moment.
Okay. Are the rules different in Scotland? I imagine they are.
It's basically the same. Mortgages and things like that are slightly different in Scotland, same as wills and trusts, etc. But the majority of our advisors are based in England and Wales. So that's just the only reason we don't do anything in Scotland.
Okay. You mentioned your advisors there. So do you have a team of people that you work with?
We do. We have a mixture of people who are employed by ourselves and also some people who are self-employed freelance. And they're dotted around the country, and they all come under the same banner of Mather and Murray Financial.
Right, wonderful. It sounds as though you've got quite a big enterprise there, Steve.
It's growing. We're recruiting at the moment, which is good. I've been doing telephone interviews and Zoom interviews this week. So the team is expanding, which is good. And like I said, we're moving into new offices in Old Town in Swindon. Actually do the move tomorrow and then go live on the 1st of September. So that's all pretty exciting as well.
Fantastic. And it's really encouraging to hear some positive news in this dire situation that we all find ourselves in at the moment.
It's been interesting. We've made contact throughout lockdown with all our clients just to see how they do and how they're coping. And we've managed to do little things, such as we had one client who was shielding and unable to get access to the shops, etc., and all the family were remote. And we managed to put them in touch with another client who could actually go and do some shopping for them.
Oh, wonderful.
Which was ideal. And then we've had people that's been furloughed and unfortunately now being told they're made redundant. So we've been helping them with other clients who do CV writing and things like that to try and give them some support. One chap had been 27 years in the same job, and he said, I've never been for an interview, I've never wrote a CV, I wouldn't really know where to start.
Oh, bless.
Yeah, so it's given help like that. So although we concentrate on the financial side, where we can, through links with other clients, we might be able to help and support them with other things as well.
And I think that's the thing today. It's about collaboration, isn't it? And it's about seeing where there's opportunities to help people. And it sounds as though you've done a wonderful job there and basically used common sense. If somebody needs help here and somebody over there can provide it, why not put the two together?
Exactly. It's even down to things like budgeting. If you've been furloughed, you've got reduced income, and all of a sudden the panic starts to set in. And I've made calls on behalf of clients to the likes of Sky and said, we're going to leave you, and then come around and said, right, I've now saved £40 a month on your Sky bill. So it's little things like that. Go above and beyond what we normally do just to help and support. That's the key, really.
Yeah. So that's a really honest, ethical way to trade, and it's refreshing and encouraging to hear, Steve. I take my hat off to you, because I don't often come across companies who are so open and transparent and happy to work collaboratively. So how did you get to this big team that you've got and is growing? Where did it all start?
My co-director Sam, we both used to work for another company, and as normal over the coffee machine, I think we could do things better. Of course we could. And we had a bit of to and fro, and should we make the leap, should we not? And unfortunately, him and his partner was involved in quite a nasty accident, and they were off work for quite some time. So when he came back, it was literally, life's too short, we should do it. So we made the leap, and there was only ever going to be me and him. We had no ambitions of being anything other. And through our processes, one chap we used to work with wanted to do something similar. So we said, well, we'll help you. We'll guide you through what we've gone through. You can learn from our mistakes, so to speak. And partway through that process, it was, can I just come and work with you? Yeah, why not? And of course, once you get one, you might as well have another and another and another, and that's the way it's gone. And a lot of it's been through referrals from other people we know who've come to join us, and they said, there's a friend of mine looking to move, would you be interested in speaking to? Yeah, why not? And we've now got into the position where we've actually got apprentices as well. So we brought on younger people to go through an apprenticeship program to be a fully fledged financial advisor, and again be able to grow with the business as time goes on. So it's been really good.
Fantastic. Really, really, really exciting for you. So when did you make the break? When did you make the leap?
2014, I believe. It might have been 13. I think it was 2014.
And had you always been at this particular company for many, many years, man and boy?
I hadn't been with them for that long, in all fairness. I joined them, and Sam had been there for some time. He was their only what we call independent financial advisor. And there's a difference. A lot of financial companies are what we call restricted or tied, so they can only offer and advise on products from certain providers. Where Sam, and the way our business is set up, we can provide products and look at things from literally anywhere across the landscape. You know, so we're not restricted to who we deal with. We've got no ties. Everything's done for what's right for the client.
So were you able to take with you your qualifications, credentials, etc., or did you have to start again?
Now, qualifications, yes, but we had to become what's called directly authorised. So we had to go through quite a lengthy process with the FCA, which was interesting, but it was good. The only thing we didn't do when we started is we started virtually from scratch. So it was attracting new clients. So we didn't go after any of the existing clients that we had from the previous company. Through time, some of those clients have sought us out, which is fair enough, and we spoke to them and obviously rekindled relationships. But everything we've done really has been from scratch, speaking to people like yourselves even, and even people that we're not doing anything with, we've given them a fair view on what they do, and they've referred us to other people who we have done business with.
Yeah, basically just being a nice egg.
Yeah, just treating people fairly, and that's the whole, you know, the whole ethos of the whole business. You know, it's not what we can do for you; it's how we can show you. Is there anything you need to do?
Yes.
And lots of times, you know, you're ticking the box. Everything you're doing is really great. You've got everything in place. Fine. So what do we need? You don't need anything at the moment, but we'll keep in touch.
Yeah, brilliant. Because we don't know what we don't know, do we?
No, exactly. Yeah, and again, we've gone into schools as well to try and encourage some of the younger people that are coming up as to what type of industry or employment you want to go into. Have you thought about financial services? And then give them a little bit into, you need to start thinking early about how you budget for things. So try and instill some simple financial ground rules, which hopefully will put them in good stead when they get to that point where they might want a mortgage or a family. And it's just those building blocks. Do it right from the start, and it will, you know, put them in good stead through their lives.
Excellent. So where were you then before this company where you and Sam met by the coffee machine?
Well, Sam was involved in the banking world in Lloyd's, and he was working for other companies again as a financial advisor. I, for myself, prior to coming into this world, I used to work for British Gas Business, and I did parts of acquisitions and mergers. So I was looking at businesses that we might potentially purchase. So I would do the due diligence on that, and then do all the restructuring and formulation of different plans to restructure the business accordingly. And that was great. I loved that, in all fairness, because it was very much into people. So again, you came into areas where people were either have done their time, should we say, and looking for an exit strategy, which was fine. You had a set of people who were really good, and you wanted to support them and actually make sure you could look after them and move forward. And then, unfortunately, you also had a group of people that were, it's a case of, I'm not too sure why you were there in the first place. They just fell through the cracks. And that worked really well until it got to the point where all I was doing was project managing things, and I was in an office, and I was very, very remote, and I saw no one. So in one of my restructures, I restructured myself out.
Very good, very good. I've had the privilege of being my own boss for 40 odd years, apart from 12 years in the middle when things went a bit wonky. And we need to be environments where we are suited and we can be ourselves, don't we?
Definitely.
And over the last 20 years, I've specialised in behavioural psychology and about helping teams to function by understanding each other's behaviours and understanding that everybody has a different skill set to bring in terms of what they can do, you know, qualification wise and that sort of thing. But actually, fundamentally, the behaviour is the thing that can make a team gel really well, or it can break it apart. So it's very interesting that what you've done has you've kind of reinvented yourself as you've gone along, but it's always been in your own true style with the authenticity of being a people person. So being in a room on your own is not a people person type of environment.
No, definitely not. Yeah, definitely not. And it works again with the team. You know, we're very much into, we've got a mixture of experience within the team, and it's very much drawn on those experiences. And especially some of the newer people, they will come in and they're the ones that will challenge how we do things.
Yes.
And sometimes it's a case of, yeah, that makes sense. Okay, let's look at it collectively. Can we make that difference? If we get a complete agreement, let's do it. If not, let's try it.
Yes.
Let's come back and analyse it. Are we all happy with it? Right, let's go with it.
Yeah.
Yeah, and that includes everyone from receptionists through to full IFAs. Everyone's a part of it. So we don't make any decisions where prescriptive. It's always, this is what we want to do. What do you guys think about it? Let's talk about it.
Brilliant. That's so important. Very often you hear this in a team where things aren't working well. You've only got to look at the leadership, and they say the fish rots from the head first. And clearly you've got your team environment, your culture is really quite different from other IFAs that I've been speaking to, and other professional services, and it sounds a really good culture, one to be encouraged.
Well, we're in a heavily regulated industry, and although we have to comply with all the regulations, it's how you can interact with the individuals, and everyone's different. So again, you might be talking to someone who wants to know all of the nitty-gritty detail, and the other one wants to understand what I'm talking about.
Yeah.
So you have to adapt all the time.
Yeah, absolutely.
We had some good sessions on Zoom earlier with some of the older clients, just saying, I can see your ear. Now, if you put the phone down, can you see me? Yes, keep it there, please.
Yes, yeah.
I can still see your ear.
Yeah. Brilliant.
It's been interesting, been good.
Yeah, absolutely. And it's about with the different behaviours. Some people that I deal with, I've gone from professional services to become a health mentor, because I've seen the devastation, including myself and my own health journey. When you're working in an environment that you're so passionate about, you actually can easily get carried away and work too many hours, because you then blur the lines between work and fun. And I got to that point, and I was kidding myself that working till 2-3 o'clock in the morning for clients, doing turnarounds and team dynamics and all that kind of stuff, and then getting up at 6 o'clock and doing it all the same again, because I enjoyed it. Intellectually, that's what I was telling myself, because I was really having fun, but my body had other ideas.
Yeah.
So there's a balance. So between financial health and physical health, there's a huge balance. And of course, if people are out of kilter with their financial health, that's going to affect their physical health because of the worries and stress.
Success, sleep patterns, everything. Because if you start worrying about things, it's the whole thing. It's a work-life balance, but it's a life balance. You know, you
Yes.
go to work, and are you going to work and is work controlling your life? And it doesn't have to be. It's a big part of it. You know, I often say to people, you go to work to earn money. If you can go to work to enjoy it, you've cracked it.
Yeah.
But it's thinking about all of the things, how what you do on a day-to-day basis affects the family, affects other people, and it's just consideration really, and think about yourself. And all too often people don't. You know, like you said, if you're working all sorts of hours, you're doing it. No one sees you doing that.
Yeah.
You know, it's like someone that comes in late every morning. Oh, they're in late, but they're gone, and they don't see that person staying late.
Yes.
So it's just that mindset. It's what people perceive as being, they don't do very much. I'm always here early, yes, but you don't actually do anything. You're not productive.
Yes, yeah, exactly. Yeah. So what's going to be happening in the world of finance with all of this financial reset and
Well,
the way
there's,
money's going?
yeah, we've had a big influx on mortgages recently. People looking at mortgages because obviously they've done the stamp duty, where they've cleared the stamp duty off. So there's been a lot of new mortgage applications coming in, first-time buyers, etc., taking advantage of the non-payment for the stamp duty. So that's been pretty good. The markets themselves, when COVID came in, the markets took a bit of a hit. Which historically we've seen lots of crises over the years where the markets have dropped. And I think it's all relevant for depending on how old you are. If you're near to retirement or in retirement and drawing income from a pension, for argument's sake, it's more relevant. So the type of conversations we're having is, do you need to use or pull as much money out of your fund? Can you allow it to bounce back and start to build up again? So those are very urgent conversations where someone in their 30s or 40s, rightly or wrongly, fortunate or not, they've still got quite a few years before they get to retirement, and their funds over time, and if you look at the markets over the last 30, 40 years, there's been some big dips and crises, but the markets have always come back. So it depends on how long you're in the markets, and at the same time looking to see what the individual clients, what we call attitude to risk. So it's managing how risky they want to be in their investments. So someone close to retirement will probably take a lot less risk than someone younger, because they want to consolidate what they've built up and they know they're going to be ready to start and draw an income from that. And those are the type of conversations we're having with clients on a virtually daily basis. And we're still getting a lot of clients through this COVID lockdown time where they've had time to think. So it's looking at, what have you got in the way of pensions? What different types of pensions have you got? What might that look like in retirement, and doing some cash forecasting, cash modelling based on what they're likely to want and what they're likely to need. So again, just put them on a bit of a steer of a path as to, that's where you want to get to. All right, is it feasible? Or is it a case of, and the simple question is, you're never going to do what you want unless you put more money in? Or pleasant situation is, you've got more than enough. If you want to take out retirement, you've got a comfortable retirement pot that you can pull from. So those type of conversations, and then looking at income and protection. So we income protection is one of these things in the UK. It's offered by lots of companies. The uptake isn't fantastic, but end of the day, most things are sold because of, I've got a mortgage, you need life insurance. Makes sense. You've got a family, you need a will, you need to appoint guardians in case something goes wrong. So everything seems a little bit transactional. So where we look at it and say, right, what's the likelihood of you dying? Depending on the age, it can be quite small, but the likelihood of you being ill and not being able to work is probably more likely. So what we want to look at is protect the income. So if you were unable to work, you've still got sufficient income in to pay the bills and keep the mortgage going. If then something horrible happens, that's when you've got the other things, the life insurance that kicks in. And then not just making sure that it's life insurance to pay a mortgage, because that might not be your main priority. If the main breadwinner dies, yes, there's no mortgage, but can I still afford to live there? So it's making sure there's sufficient provision to support the family and children. And again, it depends on the individual's needs. We've got clients who've got children in private education. Quite a commitment. Now, if something happened to them, would you want to effectively waste all that money you've paid because you can't afford to continue and then put them into the public sector? Or do you try to put some type of provision in that if the worst happened, there's enough money to cover to continue that going forward? And those are the type of conversations that we have on a regular basis.
Is COVID changing any of the types of policies out there? So, for example, you mentioned lots of new buyers and so on. If I was a young person today, I'd be thinking, great that I could afford something. However, I might not have a job in 2 weeks' time. How am I going to pay it? So I know you've got the policy protection, but has COVID changed the way the nature of these policies?
It has to a degree. It was very, very bad early on because no one knew what was happening. So whereas you have, with most income protection policies, you have what they call deferred period, and you can have that deferred period where it can be, if I'm off work today, they will pay me from tomorrow. Those were nearly all extended out to a minimum of 1 month. And that was allowing for people that could be self-isolated for 2 weeks, could then contract the virus. Most new policies, if you had symptoms, it wasn't until you had that symptoms passed and tested could you actually have the policy. So but it has relaxed more in the last 6 to 8 weeks. It's getting back to what I call norm. So you can apply for the policy as a normal individual. And they ask the question, have you had or have you been in contact with anyone that's got COVID? And then it goes through an underwriting process. So then it would take into account the individual's other health before that decision was made. And it's never or very rarely a decline, but what it might mean is there's a risk element that something could affect you more than it could affect another person. Therefore, there's what they call a weighted premium. So they'll pay an additional premium for the benefit of that policy. I think the worst one is if someone is then made unemployed. Now, unemployment protection was quite big 20 years ago, and it's hard to find a company now that will actually offer unemployment benefit because the world is so ups and downs. You've got people who's furloughed, you've got all the, obviously the big companies, British Airways, etc., making people redundant. So it's a very hard policy to actually do, and most companies have actually stopped offering that particular policy at the minute because the risk exposure is too great. If you've already got it, great, because it was normally quite a small premium. And you know, I've had clients say, I'm paying, you know, £5 or £6 a month for this, is it worth having? Yes. Once you've got it, keep it. It's no different to life insurance. If you're a 20-year-old, life insurance is going to be reasonably cheap because the chances of you dying is quite remote. When you get to my age, the insurance company thinks, yeah, we might have to pay this guy, so therefore the premiums are higher because likelihood is I'm going to pay less and I'm going to die sooner, if that makes sense.
Yes, yeah, it does for the average bunny. Yeah, I have a completely different view on all of this, which I probably shouldn't share right this
No,
minute,
sure.
because it's all about self-responsibility and taking responsibility for your health and well-being yourself. Having learned a lot about it over the years, and it doesn't matter how old you are, whether you're 20 or whether you're 60. If you need to take responsibility for your health. So I'm a great believer that we should be teaching our young people about health and well-being, as well as the financial and the career and the pensions and all the rest of it. We should have some kind of topic that it's like a life thing.
Very, very much so. It's a lifestyle. One of their main providers, Vitality, they are very much, it's a South African company originally, and they're very much they're promoting well-being and health. So the more healthy you are, and you have regular checks, you do blood checks, they offer the Apple or whatever brand of watch to do the steps and things like that. So they're promoting you to do exercise, to be healthy. And the better you are, your premiums can actually reduce or will never increase. So that's a nice little angle. So they're looking at it from a slightly different perspective, that yes, we expect everyone to look after themselves, but what we'll do is we will actually help you and give you something back. And the advertising on the TV at the moment is with the Olympians. A lot of the our Olympic people are promoting it as well. And it makes perfect sense. It isn't right for everyone.
Yes.
You've got to be doing it, because if you're just going to take it and not do anything with it, then it will cost you more. But it's to try and give you a little bit of a kick to say, come on, do that little bit of exercise, do the 30 minutes a day or 20 minutes a day, and you'll see the benefits. So your health, your wealth, it all ties in quite nicely.
Yeah, absolutely. Your health is your wealth, and I have the most amazing health. I've had all sorts of. I've never been ill. I've had cancer 4 times, and I've had a kidney disease and all sorts of different things. But I've never been ill as such. But I've been inconvenienced, and that's what the insurance stuff is about. Is when you have these inconveniences, whatever it's called, whatever it looks like. It's important to be aware that you've got, important to be aware of the fact that you can take precautions financially, but also that you can, there's a place to go, you know, and it's a choice, isn't it? As you say, it's a choice, and everybody's different.
It's the same with private medical insurance. It's quite an expensive commodity, or can be, but you can tailor it to what your needs might be. Now, my simple logic is, if there's something really bad with you and you collapse, thankfully NHS, blue flashing light, they'll come and they'll sort you out. If you've got something which isn't life-threatening and you go on a waiting list, but it might be debilitating, it might be irritant, that's when your private medical will come in quite nicely.
Yeah.
Instead of waiting 6 months plus for a knee op or something, you can go and see the consultant. Are you free tomorrow morning? There you go.
Yeah.
And you're in. So it's hitting that balance. But again, it's round to what the individuals, what they need, what they want, is what's most important to them, and tailoring it accordingly.
Yeah, absolutely. Choice again. So in summary, what top 3 tips would you give, no matter what age somebody is, whatever their circumstances? What would you be your top tips?
Always attempt to save a percentage of what you earn. Now, how you save it, there's various means. If you're putting into a pension, so if employers go on a pension, make sure you're in that scheme. The employer will always contribute and you're going to contribute. Certain schemes will give you more money. The employer will match what you pay to a certain amount. So imagine if you're putting £10 in and they're putting £10 in, your £10 are worth 20, so you double your money straight away. Anything like that. The only thing you caveat around that is, when you're putting into a pension, you can't take from it until you're in excess of 55. But there's any type of saving, investment, ISAs, cash ISAs, everything that's quite low, but investment ISAs that track the markets, provided, and again, it's accessible. That's a good thing to do, but definitely save. Budget, work out what it is you spend and review it all the time. All too often, we're a little bit nod and dog scenario. Lots of things on about the compare sites for your gas, electricity, and all the rest of it. But you should do it. Think about what it is you're spending and check, am I buying something I'm not using? You know, Sky, again, is a good one when you talk about how much you spend. It's very easy to add all these packages on, but actually think about it. Am I using any of it? And then simple things, very much into the household. We're magpies. We buy things. We like shiny things. We like things, and it's all very well. But again, if you, every once in a while, I think you should look at your wardrobe. If you haven't worn it, especially more than 6 months, you probably don't need it. And you're better off doing the Mr. Bean type of scenario to a degree, and having sets of clothes for home and work, and you wear them and rotate them, so you actually are wearing and rotate them. So when they need to be changed, every time you buy something new, throw something out.
Very good. So in summary, that's save, budget, and reassess is the 3 words I've written down there. Yeah, very sensible advice. So thank you very much, Steve. So Steve Murray from Mather and Murray, thank you for your wise guidance.
Been a pleasure
speaking with you.
Okay, many thanks.